Can you picture 2,000 point drop in the Dow, 190 point drop in S&P 500 in the next 48 hours? Leonardo, hey buddy, I've been following you for a while. And look, I know your channel used to be called Market Crash, so you're not going to scare me with your bearish predictions here, drawing this beautiful orange thing at 29.46 all the way down to 27.50. Oh boy, that just sounds too good to be true, man. What you got going on? What are you looking at? Guys, in this video, we're going to tell you exactly what's going on. This is what will crash the stock market, and it is not the trade deal that everybody's focusing on. The only thing to focus on right now is something that nobody's actually paying any attention to. Forget about the damn trade deal. This is what I want you to focus on right now. Oh, and before I'm going to show you what you need to focus on right now, just a little note right here. At 13:36 p.m. or 1:36 p.m., just a few minutes ago, it's about 2 p.m. right now on October 10th, 2019, as I'm trying to record this for you guys. Basically, Federal Reserve says we're not expecting a recession. And when you hear that from Federal Reserve, guys, history shows it is definitely time to get freaking worried, because they never get this shit right. Never ever in the history of the stock market do they get this shit right. So the higher probability is to bet against the Federal Reserve. Now here's the deal, guys. I'm going to reveal some incredible secrets of trading in this short video. That is designed to help you stay on the right side of the market. There's actually an incredibly highly positive correlation between oil futures and S&P futures, and it continues for the last few weeks, and this type of correlation has not been seen in a while, like in a couple of years kind of while. So absolutely phenomenal correlation. Focus on the purple action, the high roller action. This right here represents the chart of the oil futures. The green and the red represents the chart of S&P 500, or if you are on TD Ameritrade, basically /ES is what we're looking at here. 5-day, 15-minute time frame. The importance of this is so that you can observe that although historically they're not this much correlated, but on only certain time frames throughout the history, this is one of these times throughout the history where the correlation between all futures and S&P 500 is absolutely magnificent, going to the moon, in a sense that we're going back down to earth as this party finally resolves into a big drop in the market. So while people are still dancing, and clearly some of us can hear the music is changing, people, for the most part, are still dancing. Institutional investors are still dancing. They are upgrading the hell out of what? Out of the Apple stock. As a matter of fact, they are upgrading the hell out of the semiconductor stocks. God damn it. Are they this fucking blind? Can they not see that this whole thing is about to come down? Nvidia, they're buying the hell out of this thing. Apple, they're buying the hell out of this thing. Guys, this is not going to end up well. And you can say, Leonardo, of course, this is not going to end up well. But why now? In this video, I'm going to show you exactly why. So stay with me. This is what happened yesterday on October the 9th after the market closed. Pay attention to this right here. Oil hits 51.26 around 6:30 p.m. roughly. That was last night. Oil drops to 51.26, while S&P futures actually dropped to 28.81. So this is all futures. This is the chart of S&P 500. Coincidentally, right around 6:30 is the magic number of the day. Both of them drop. Which one followed which is the question, and the fact that oil started dropping like a rock caused S&P futures to drop like a rock. Now, the ultimate question, if you're a day trader or swing trader, is how do you know that this correlation is about to repeat itself and what to actually pay attention to so you can nail the next move? Or more importantly, it's not just about nailing the next move, but nailing your entry. So if you're struggling with getting some substantial fraction in your account, it's about the entries. I'm going to reveal to you how you could have nailed this entry. This is a very detailed breakdown, guys, so grab your pen and pay very close attention. Again, just to review this, in purple, in the right corner, in the purple shorts, the champion of everything that brought the markets down in the last 10 years, the heavyweight, the oil futures. And in the left corner, in the green shorts, we got S&P 500 that is about to get taken down by the champion. That is the oil futures. So basically, the champion in the right corner, the oil futures. Okay, now we're looking at an overlay, guys. This is very simple to do. If you're in TD Ameritrade, Thinkorswim, we're looking at a ES, which represents S&P futures, 1 day, 1 minute chart. We're overlaying a comparison line of /CLF 20, which represents the champion that brings the markets down, the CLF futures. What we got going on before the market close, we have a typical move 6 type behavior. Now, you wouldn't know this was a move 6 type behavior unless you studied the 13 markets move formula. But you would definitely know this if you studied our charts divergences course in pattern recognition. This right here, guys, is a simple double top formation. Okay, double top in the oil futures around 53.4 level. This double top precedes the top in the S&P 500, represented by the red dot, because S&P 500 is about to get knocked out. And the way you could have simply played this is by observing the divergence. Understand that in some instances, certain things are going to be highly correlated. And when things are highly correlated, what you want to do is you want to run the 1 day, 1 minute chart and observe the divergence. The divergence, and when certain things are highly positively correlated, and all of a sudden, for a brief amount of time, they're no longer correlated. In other words, they're supposed to be going the same direction, but all of a sudden they're not. It projects a bigger move in the direction of the champion, which the champion in this case is the oil futures. So double top is set, and the oil futures represented by this double top formation in purple. It is preceding the top in the S&P 500 futures, set at the magic number about 29.31. As you can see, while oil begins to move lower and continues lower, S&P futures are still going higher. Now, shortly after that, oil drops like a rock, and so do the S&P futures. Now, notably, also interesting that oil sets a low right before S&P futures are setting a low as well at 28.81. When oil is reversing, so do the S&P futures. Print it out, study it, put it in your refrigerator, okay? Take a snapshot on your phone, look at it, make love if you have to, until you understand what the fuck you got to do in order to day trade this. Guys, this is this important. This is why I'm actually taking my time to record this shit for you. Now, to understand how to trade this from here on, understand one simple fact. The only chart you need to understand right now, it's not the Trump versus Xi, Trump love affair.
Hey, Xi, did you call?
No, I didn't call you.
Come on, man. I know you called. I see the missed call from you.
Oh, I see now. Apparently I pocket dialed you by an accident.
I just got off the phone with President Xi. He called me first, by the way. He wanted to make a trade deal real bad, which I knew he would.
It's a love-hate relationship, okay? It's sad. And they're about to get divorced tonight. Tonight, as everybody hopes that they will get married. They're about to get divorced. So what you need to understand about this divorce situation is this. CLF futures are overall in a very much bearish downtrend. We can picture this and show you multiple mover level type formations, which are pyramid formations representing the top. You're going to see Leonardo, but oil is down in the last 10 days. How can this be a top? This is a top before a much bigger drop is about to take place. So understanding overall that oil futures are in a bearish downtrend, and if we break some critical levels, it'll spell some very negative context for the market. So very important thing I'm about to show you guys. Pay very close attention. This is the trading secret about oil.
Come here, baby. Sit down.
Now, I want you to really focus right now. This is a rock. I want you to picture this rock, print it out, put it on your fridge. Not to confuse it with this rock, but it helps you memorize this concept and, print this one as well. Rock. Not exactly what you were thinking. It's not R-O-C-K, it's R-O-C, which represents the rate of change, guys. Rate of change. That is what I want you to focus on when you trade in the market. Rate of change is everything. Let me point out on the chart of WTIC, which represents crude oil prices. This chart ended on October 9th, so that was before the market basically opened today. The importance here is to understand, ask yourself a simple question. In the recent history, when was the last time that S&P 500 or the markets overall dropped quite a bit, significantly, like, to the magnitude of a couple hundred points on S&P? Well, the answer is it was at the end of May. Now, if you study at the end of May what was happening to oil, oil was dropping like a rock. Now, the importance here is not that oil was falling. The importance here is at the rate at which oil was falling within a certain amount of time. So as you can see, within a very short time frame, oil dropped from 64 all the way down to 51. Now, you can see oil was also falling right here, but it didn't bring the markets down because overall oil was trading in a tunnel. When something trades in a tunnel, clearly stuff goes up and down all the time. So the most influential times to pay attention to is when something drops or something goes high substantially within a very short amount of time. So when you look at it from such perspective, we have a resemblance of the situation happening within a very short amount of time without the market adequately responding, as the history points out, to the type of response that the market should have. So basically what we're really saying here, this slope right here resembles the slope right here. It's about to produce a much bigger drops in the market. Consider these three dots. Yes, the three miracle dots, which spell a disaster to the oil prices in the near future. So you may be wondering, still, Leonardo, I don't get it. Oil was dropping here, and it was dropping here, and it was dropping here, but the market really tanked right here. The market didn't do a whole lot, actually moved higher on certain occasions right here. And it looks like it's dropping recently to 28.55, and then it's bouncing. So what's really going on? What is the difference here? The difference, guys, is the rock. Think of the rock. Think of Dwayne Johnson. Whatever you got to do to remember this, just make sure you remember the rock. R-O-C. To make it a little bit more vivid, here's probably a much more vivid example of the drop in November, December 2018, which we accurately predicted. And while everybody was talking about this and this and that and, a bunch of crazy bullshit in the news, what we were focusing on is oil. And oil tanked all the way from 77 to a 42, which represents a 54% drop in just 50 days. Notice how consecutive the drop is. And notice over the short time frame that it actually takes place. So we're talking about the rate of change is how fast something is moving within a minimum time frame. See, if oil dropped by this much within like a few years, it wouldn't matter. But if it's dropping fast within a very short amount of time, then it does matter. And what I was trying to draw here by these blue lines, guys, is to help you visualize potentially what is about to take place. So oftentimes it's very helpful. This point number one, okay, the slope right now begins to resemble the slope of the drop in November and December 2018. So if the slope continues to stay at such an angle and we go 50 days out, so far we're 10 days into this drop, very similar slope, almost parallel. But when you look at the slope itself, it's almost perpendicular. So the more perpendicular, like a 90-degree angle the slopes are, the much faster is the rate of change. So when you're looking so far, we've gotten from 62 to 52, roughly representing 8-9% drop in 10 days. If we're to continue at such a pace, we will draw exactly what we drew a year ago, represented about a 45% drop, which will take oil prices all the way down to $34 by November 30th. Now, you may think this shit is crazy, but it's not. Coincidentally or not, next OPEC meeting is on December 5th. So clearly, if oil prices are about $34 by November 30th, right after Thanksgiving, okay, then the whole puzzle is solved. Okay, they will be making substantial cuts to oil productions once it hits the 34 level by or around November 30th. Now, that is when we could expect to begin to see a lesser correlation between oil and S&P 500. But until then, let's roll and let's stay with this correlation, guys. So the question of the day, today at 2 p.m. on October the 10th, is this. If the market is really supposed to go higher, like S&P 500 is currently up about 22 points as I'm recording this. When I took the snapshot, it was up like 20.5 points. Then why is Amazon down? Why is supposedly the darling of all stocks over the last 5 years, why is this thing down? When actually S&P was, it was up about 22 points. Amazon was down about $3. And it's still negative. Like this shot is, Amazon is down $1. Not a big deal, right? I'm basically not moving, but it's supposed to be moving higher in days when overall the market is moving higher. It's supposed to be one of the best stocks. So why the hell are they buying it? Combine that with this pattern right here, which is head and shoulder pattern, has high probability of breaking lower once you see this pattern, especially when this pattern confirmed on multiple time frames, which we don't have time to talk about in this video. But if you want to know the details, then all you got to do, guys, is subscribe to the 13 Markets Move Daily Analysis. We'll break out all the details about such formations to help you make sense of the market. So the answer to this, what appears to be a complex question, is rather simple. Everything we've talked about, the chart of Amazon in the last 2 weeks. And you go back in the channel, you can look at some videos where we're presenting the Amazon chart a couple of weeks back, 3 weeks back, a week ago. We said that Amazon chart will resolve into a death cross formation. Now, death cross is not something you want to play with, okay? Especially when once this death cross is in the making, which happens to be today on October the 10th, especially when it coincides with a bunch of bearish reversal candles, meaning that every time Amazon stock bounces, institutional investors are selling it. Which means they're not only selling Amazon, they're selling technology stocks, particularly the all-time favorite cloud sector, which has been the best sector over the last 5 years. So why are institutional investors selling the best stock and the best sector? It's because the market is about to drop. It's that simple, guys. So you look at the oil futures, and if oil is breaking below 51, you want to buy a ton of puts. Particularly, you want to buy some damn Amazon puts in this death cross formation, which we did recommend our 13 Markets Move daily subscribers to short this thing when it was trading at, guess what? When it was going higher today and was trading at a level of 1735, 1736. Right now it's at 721. So the position double in the money so far. But what's about to take place is going to propel someone's account to an all-time high while the markets are actually dropping. So if you don't know how to make money when stocks drop, guys, click the links below. Take advantage of the chart divergence, 13 Markets Move formula. Goddamn, get educated so you can get better with this shit. Bottom line, Amazon going down to $1,658. Buy tomorrow or Monday. It's about to go down. Beautiful death cross formation. History of death crosses points to a 10-20% drop. If Amazon just drops $5, conservative estimate, that represents an $85 drop. $85 in a stock that nobody is expecting to drop besides the 13 Markets Move formula participants. Now, I think I've revealed a couple of secrets that should be helpful to anybody trading the market right now. Overall, I'll just finish on this note that Move 11 continues to dominate pre-market trading day after day. Move 11, for those of you that are not familiar with it, is a topping move. Oftentimes, it is also coincide with the head and shoulders, which is a highly bearish pattern. So if there's anything to be paying attention to right now, it is not the trade talks, it is the price of oil. And if it breaks below 51, load up. It's time to take no prisoners. Some crazy moves, wild crazy moves about to take place. And I want you guys to stay on the right side of the market. With that said, trade like a rock star. Get ready for the earnings season that's about to kick off next week. If you haven't taken our Trade Like a Rockstar course, make sure you do. Click the link below. Make yourself the best trader you can be this year. Don't wait another day. Let's roll.
Trading wins and losses is just like everything else in life that is worth fighting for. You remember your marriage? Man, it was beautiful when you were getting married, but you had no idea how ugly the losses of this divorce were actually going to be. Like opening a business, thinking you'd get rich overnight. But in the midst of it, you ended up maxing all of your credit cards just to sustain that business for a few years before you even realize a tiny bit of your first profits. Like buying a house, thinking it would go up in value forever and ever, just realizing how wrong you actually were when 2008 hit. Like having kids, it was such a great idea at first. Remember how excited you were, terrified and scared at the same time, how much joy you actually had. Until your kids turned 2. Man, the terrible 2s. You thought that was bad until they turned 13, 14, 15. Shit, but you wouldn't change it for anything. You love your kids, no matter what your emotional losses or wins are with them, no matter what your financial losses or wins are. It really doesn't matter, does it? You don't quit on your kids, no matter how tough things actually get. For some of us, it's the same thing with trading. Just think, how long are your kids going to be your kids? The answer is forever. How long do you see yourself trading the markets? If your answer is forever, then you owe it to yourself and your kids to invest in the 13 market moves formula, so that your life journey of trading would be most rewarding and joyful, both financially and emotionally. Live to trade, trade to live. Conquer the world one trade at a time, fearlessly using the 13 market moves formula today.